Alright, we recording.
Bet. So guys, we're doing a little free class on indicate stock indicators today. Gonna be going over what kind of indicators that people prefer, what kind of indicators fit into certain people's lifestyles, people who have 9 to 5 jobs, some people who can scalp in the morning, some people, can't watch the charts in the morning, different indicators for different types of people. We're just gonna be waiting on more people to join, giving it a few more minutes. While we wait, I'm gonna stream my screen. I'm gonna be using a mix of trading view and Webull charts. I've been liking the Webull charts on online. Pretty simple. I like the
I've been think
simplicity of the UI.
I've been thinking about using the Weevil charts because Trading View,
Man, they're pretty fire.
they're with Trading View, their linear regression lines aren't accurate.
Yeah, I've noticed that too. I don't like using linear on trading view anymore. Man, we got a lot of Fed speeches this week. Let me check.
Man, they talk too damn much.
Dang, they got it lined up
Every
pretty much.
yeah.
Yeah, Fed speakers this week. We got FOMC meter Bostic Tuesday, Member Daily Tuesday, Member Williams Wednesday, Member Waller Wednesday, Member Evans Wednesday, Member Williams Thursday, and then the Vice Chair Clarita Friday.
That's
So
damn
pretty
near
much
every
every
single
day.
day besides Monday.
Yeah.
Oh fuck.
Give just a few more minutes if anybody's trying to catch it live. If not, we're gonna record it.
Let's start at 3:05. Just give them because like with the other classes, I always give them like 5 minutes to get in here. What's up, Roberto?
Yeah.
Roberto.
How y'all doing? Hope your guys' morning's going good. Roberto, Sid. there's a there's a indicator called BBW.
You said BBW.
Yeah, I'm like, what the hell? See what this does on my screen. Damn, what was this? Throw the MACD on there.
I'll be right back.
No worries. What's good? NFT God. Let's get it. Hope your morning's going good. Yeah, I have TOS. I have TOS, Webull, TradingView. I just like the simplicity of Weeble's interface, honestly. I really like the online version. Like not the app is straight too, but I don't trade for my phone ever. But I downloaded like I put Weeble on my computer for the first time, and I actually think the charts on here are nice. You got the level 2 if you have it. The charts look pretty good. The charts don't like glitch out. Like some charts are really glitchy. Like TradingViews can sometimes be glitchy. But TradingView does have more customization. So TradingView is probably my favorite. But I think Weeble is easier to look at. I'm just gonna give it a few more minutes. We'll start at 3:05, 3:06, just for some more people to join in.
What's up? What's up? What's up?
What's good, Nico?
Yo, that Elon tweet is wild, bro.
I know, man. He's a funny guy. Just tell me
just
the
sell off
word.
already. I want my puts to print.
I know, man. I might have to hop in on him.
Definitely
Te-
see what happens tomorrow.
The short to medium term is not looking good. But actually, I was just looking at Neo, and I'm gonna talk about Neo though. I think Neo's setting up.
Yeah, we covered it on Daddy Bits today. It's really looking very bearish. Me personally, I'm waiting for the EM89 to cross below the 20, and then it's all bets are off at that point.
I think it could. Yeah, Tesla probably will drag it down, but I'm looking at a daily trend where it's not the best trend, but I'm seeing if it either rejects or bounces here for a trend reversal, because it has been in a very bearish trend.
Yeah, for sure.
Short Tesla to 0.
Don't tell John that.
He's long Tesla.
He has calls.
Oh shit! I got short levels for tomorrow.
He went. So he was shorting. Remember when I texted you Friday? I was like, "Hey, would you swing this?" He was
Yeah.
already short, and then it popped on him. Then he went long, and I think he's holding overnight or over the weekend.
Oh damn. We shall
All
see.
right. I think we're about to start now.
For sure.
All right, guys, everyone in here. I hope y'all have a happy Sunday. But today on the agenda, we're gonna be talking about indicators, stock indicators. So right now, I got a naked chart on Webull. I'm gonna put we'll go to SPY. Got a naked chart of SPY on the daily, and we're gonna go and the first indicator I'm gonna talk about, I'd say I'm gonna go from level of importance. And this is a very what I was gonna actually what I should say first is there is no perfect indicator. You know, there different indicators are better for different people. So my favorite indicator that I'm gonna go over first is the VWAP. I'd say I cannot enter a trade without knowing where the VWAP is in relation to the stock price. So I'm just gonna go over here, find the VWAP, add it, and on the daily, you're not even gonna be able to see it, right? The VWAP. But we're gonna go over to the 5 minute, and you'll see the VWAP. How the stock is in relation to the VWAP will tell you the trend in this is how you use the VWAP. So you can see on the 5 minute, this is the VWAP right here. SPY is jumped over the VWAP, elevated, leveled out, almost didn't come back down to the VWAP, and it's still bullish. This is very bullish when a stock is over the VWAP. So I'll use the VWAP to judge how overbought or oversold the stock is, because once a stock reaches very heightened prices where it's very far away from the volume weighted average price, it's bound to come back down to the VWAP. Because if you look at the daily, you don't see that orange line, or if you go to the hourly, you can see that the orange line very closely follows the candles. So on the 10 minute and the shorter time frames, you're going to be able to find those. quicker swings with the VWAP, and a lot of institutions that are selling and buying stock are going to be selling and buying stock based off of the VWAP. So it's a very important indicator. You could add it as a small little line like this on your chart, and it wouldn't take up too much, I would say. And you can use it. A lot of my favorite use of a VWAP is actually a bounce on a strong trend. So we can try to find one. We'll go Lucid maybe. Go to the 30-minute. Go to the hour. Lucid might be too. Alright. Okay, here. Oh, I typed in TSLA. Go Tesla and we'll find a VWAP bounce. Okay, right here. On the orange line right here, people caught this VWAP bounce all the way up here. And it held the VWAP, didn't come down. And people would do it like this, where it crosses the VWAP here. This was a bad one, but right here on the bounce, they'd buy in and hold until it comes back down under the VWAP. So if you caught a break from here to here, that would have been a great move. And people sell also the same way. So if it comes to the VWAP, they'll sell and they'll only buy once it comes back over the VWAP fully. Like this was a false breakout over the VWAP. This was a breakout over the VWAP. Came up, and here kind of comes down and rejects back down under the VWAP, you sell. So from a break from here to here is a nice bullish move. So you could see how people use the volume weighted average to get a kind of a generalized idea of where the stock is in relation to the average of where it should be. So that's just the VWAP. So next, I'd say next stock indicator I'd say is Bollinger Band. The Bollinger Band is a volatility indicator. If you came it for the last seminar, we actually went over Bollinger Band and Keltner channel and volatility channels in the last one, so you would be pretty aware with this. A lot of people use Bollinger Bands with the tightening, widening. People use it as a sell, buy when the stocks, like right here, when the stock dropped from the Bollinger Band aggressively, people would have bought on this breakout. And then once it entered back into the Bollinger Band, people would have sold. People do that also on the upside. If it breaks out of the Bollinger Band, people will buy in and sell once it comes back into the Bollinger Band. Or people will also just trade rejections in the Bollinger Band. That one is a little bit more tricky, but like let's say here, they would have rejection of the Bollinger Band on the breakout, they would have played a put. So the Bollinger Band is a very, very popular one for volatility. Institutions are also like these are very popular with institutions. Bollinger Bands, VWAP, they're very basic and they use these on more of like an hourly, daily, weekly time frame. They're not really trading 5 minute or very closer increments because they're moving very large increments of stock. So they like to go from like a 4 hour state like this. So they would probably play this on a bounce. Tesla right here. Came up, came up. This is what we would call like the stock there's the Elliott wave theory. So that wave theory is that stocks move in waves or a trend. The trend right here you can see on this 4 hour is Tesla is moving up, right? So that's the strong trend. It's an impulsive wave as it would be called. This wave right here where it comes down is going to be the correction wave. People want to buy on a correction wave. You don't want to buy on an impulse wave. Institutions and large like large buyers of stock are buying on this phase right here, the correction wave, and they're loading up for the next impulse wave. The only way they sell out of this is once this wave is larger than this wave. They'll usually set up. I could probably go on here. Let me see drawings. Like let's just say this trend right here. This trend is obviously much larger than this trend. Probably should have made those different color. Go white. This trend is obviously much larger than this trend. So we're gonna say the trend is still bullish here, and this isn't a correctional wave. The only way we're gonna say like 100% like with assurance that this is in a bearish phase is once the bullish or the correction waves become larger than these waves, then this would become the impulse would become to sell. Once people's impulse is to sell, then there will be corrections back to the upside, but those would be correction waves that get rejected. So Tesla's testing, in this phase right here. Buyers have stepped in. You can see kind of on this 4 hour, but it's still not. It had its kind of had a correction phase right here. If you want to look at it from wave theory is also fractal. You can use it on different time frames. So if you want to start on like a hourly, you can say Tesla is in a downtrend right now, right? And if you want to forget about that old trend from a months ago, like this one right here, then you'd say this from this high to where we're at now, this is a very bearish trend. Then these trends right here, where it comes up like this one right here, is the correctional, and this is the impulse is to sell now. This is the correction, comes up, tries to come back up, and then the impulse comes back to sell. So unless we see a bigger wave right here, where this is just a correction, comes down, and the second wave in a wave theory, this is the first wave, this is the correction. The second wave has to be the largest. So Tesla will test it. If the next leg down on Tesla is not larger than this 1250 to 1030 level, then it isn't really starting the reversal. It would only start the reversal if the next leg is larger than this leg. If you guys are understanding that kind of wave theory is very complicated actually. So wave theory takes a lot of videos to learn. Like even I don't know like 100% mastery of wave theory, but wave theory is very useful in just navigating the market, knowing how the theory of how prices move. And it's older, but people still use it to this day and chart it. Like you can look at waves and how things go. Usually there's five, like in a wave theory, there's five waves. One, two, three, four, five. And on the fifth wave, let me see if I can actually Elliott wave cycle to try to kind of show you guys. That's right here. Uh, This is the Elliott wave. So we were saying like wave one, wave two, a correction. Wave three had like the second wave has to be larger. So same on the downtrend. That's what I would be saying for the Elliott wave. That's kind of more market psychology and not really an indicator because you can't indicate an Elliott wave. It's more of a theory. That's why they call it a theory though. So we're gonna take off the VWAP. We'll go to another very popular one, moving averages. And the way people do this one mostly is they have EMAs mixed with moving averages. An EMA is going to be your faster line, your more accurate line. The moving average is going to be your rounded out, slower one. So what people like to do on this, I wonder if I can chart more than 1 MA. Well, we'll move over to TradingView for this one. Okay, so I have two moving averages here. Studying Elliott wave while learning this almost made me say fuck options. Super boring to me. It is boring. It is like very technical, and there's different camps of trading. Don, there's the very fundamental people. There's the very technical, and then there's the people who are very psychological. Each each has their advantages. Some people say that if you have no fear and you just go into trades confidently and know the outcome that you'll always win, then you'll win. Some people say you have to know the numbers, technicals, and some people say you have to know the news. If you take tips from each of those camps, I'd say, and integrate them into your trading would be the best. Because I do agree Elliott Wave can be kind of boring. But now we're going to be going with moving averages. I got 2 moving averages there. We're going to throw some EMAs on here now. Go with the double EMA. Those are 9s. We're going to do 9. We're going to do an 18. $50, $100, and $150. We're gonna change this to an hourly. We'll get more moving averages. This one is a very popular one for hourly, and this one I've used. This one, okay, 100 moving, or go 120. Okay, we got 1850, 100, 150. Okay, right here, we're gonna go 50. Keep the 200. Okay, so people will use a mix of moving averages and EMAs like this to get you can see these smaller lines are the exponential moving averages, and then the thicker lines are the slower, just regular moving averages. People use the breaks of EMAs like this, the breaks of EMAs against moving averages to enter into a bullish swing. And you can see that this 200 day right here was holding this SPY down, and as soon as it broke right here and these exponential moving averages broke free of it, it went on a full bull run. So people will use these, and then the red line right here is the 150-day moving averages. Some people, if you don't like a bunch of lines, the most I'd say the most basic and easy one is the 150 200 day pair, like this, on the hourly. So you would buy when the 150 day, the smaller line, crosses over the blue line. So on this one, it would be about right here on this gap up. You would take it, and you don't sell until it comes back and touches. So this one it has, and we'll look in on a previous entry, like right here. Okay. So the little blue line crosses over, and you would hold this on a swing. People use this one because these are very slower moving averages. Like if you want to do faster pace, like weekly trades or monthly trades, I would say use like the 50, 100, or 18, 20, 50. Some of those. The 150, 200 is more for 1 month, or I mean like 2+ months, like swings, maybe even yearly, because you can get really nice trends out of a 150-day, 200-day cross. So the 150-day cross is here. Kind of sucks buyers out right here. Probably hits all their stop losses because that's what the market likes to do. But it keeps rising, never crosses back under until here. So we'll see how much of a move that was. That was about 417 to 446. Easy trade. If you don't want emotions, you just got to look at the lines. You tell yourself, I'm going to sell when the line comes under. And if you just hold yourself to that, you'll make money. People just don't follow the same system. If you follow a simple system like a two-line system like this, and we'll go to Ichimoku, which I've gone over I think before, which Ichimoku is even easier to follow, I'd say. If you follow a system like this, where an Ichimoku states you don't, here, I'm gonna take off the lagging span. Ichimoku states you don't trade when the stock is in these clouds, the red and green. It also states when the blue line is over the red line that you buy, and when the blue line comes under the red line, you sell. If you look at this, if you just follow those simple rules, you follow that system every day or on each stock, you're gonna see the SPY. Okay, SPY right here is in consolidation. You see how ugly these clouds look? Up, down, up, down. Right here is where you see the breakout. The green cloud means that's support. Red is resistance. So this was resistance. Broke the resistance. The red cloud was above it. Came down, tested resistance here, here, gapped up the next day over the cloud, right? And then you see the blue Ichimoku line over the red. This is a buy signal. So you buy it here, and then this is a bounce right here. You see how it bounced on the blue. You buy it here, and you don't sell this thing until the blue line crosses the red. Some people do that. Some people who are in it for even longer won't sell until the stock price crosses back under the cloud or in the cloud. Because even in the cloud right here, you could get a bounce. Like you see here, some people might have thought the trend was over, bounced back, you know? So if you follow rules like simple trading view, what? Oh, you guys aren't. Oh shit. The fuck here? Oh, okay. Damn, I had two screens open. My bad, guys. Okay, my bad. Okay. So here I was talking about SPY. I had it on the hourly. So SPY was consolidating here with the clouds. Really ugly mess, you know? And it gapped up here. It gapped up here over resistance. The red cloud is resistance. Gapped up over resistance. Came down, tested it, and it made it support. It bounced on it right here, right? Then after it bounced on resistance, made resistance support, it also gapped up here. You can see from here to here, it gapped up over this green cloud. And the blue line went over the red line. In the Ichimoku system, this is a buy signal. So you would have bought on this day and held it until the blue line crossed back under the red line. Some people use that as their buy sell, which is more conservative, being safer. Some people don't sell until the stock price comes back under the cloud, because you can see it's just in a mess right here. Here you can see the cloud starts building. It's a solid trend. They won't sell until this comes back into the cloud. You can see over here it comes into the cloud. Some people who are even more aggressive won't sell until it fully drops under the cloud, because you can see here, you might have thought the trend was over. It bounced on the last leg of support right here. So yeah, and that's SPY right here, current SPY chart. And that's just Ichimoku. That's an Ichimoku system. We'll also talk about, or I already went over can I access it on TOS? Yeah, Ichimoku should be on TOS. The TOS one might not be as nice. And I also took off the lagging span on an Ichimoku. They have the lagging span, this line, where all of this line does is copy the stock price movement and just move it over 20 moves to or 20 points to the left. So I don't know, really not too good for technical analysis. To me, it really doesn't do much for trading. I just take that off, and then the rest of the Ichimoku is good. Like the blue line, which is I think they call it the Tenkan, and this is just the conversion line, baseline. It's called like on TOS, it's called like the Tenkan, and then the other red line is called like the Kinjin or something. It's a Japanese indicator, but it's very fire, very good. Very popular indicator. I'd say this is the easiest for swing traders. If you're a swing trader that just is trying to trade trends, not trying to really look at your phone all day, this is perfect for you. Because these trends take a while to build out, you know. And once you see something finally start building a trend like this where it's over the cloud, over both lines, then you just buy in and you sell only when it comes back onto the lines. So that's Ichimoku. We'll talk about some of these at the bottom. We went over what do you the lagging span. You don't want the lagging span. It's I think that's what they call it on TOS too. Can I see the settings? Here. I'll give you here if you guys use TradingView, I'll actually give you my favorite Ichimoku. It's called Ichi. I think it's like Ichi Housey. It's not the basic one. It's one that someone built, I believe. Forget the name. If I find it, I'll just put it in general for you guys. But one that some guy made, the basic one is pretty much the same. It just looks better. But there's one that got here, and I'll show you the settings on it. I just take when I make it, I just take off the lagging span and I keep everything normal. If you got that juice. Yeah, but NFT, it's Chiku. The Chiku line you're gonna take off is the on TOS. Keep the Tenken, keep the Kijin, and you should be good. The Tenken is your faster line, so I would make that like a lighter color, like yellow. The Kijin is your slower line, like on my screen, the Kijin is red, so I'd make that maybe like the darker color, and then use those as your buy-ins and sellouts and bounce spots. We have, and then I'm going to talk about some of these at the bottom. We have TTM squeeze. We talked about this in the last slide too. This is taking two indicators and putting into one and at the bottom of your screen to make it easier. This takes the Bollinger Bands and the Keltner channel, and it shows you when the Keltner channel is squeezing in, or I mean the Bollinger Bands are squeezing inside the Keltner channel. And people call that like a nice squeeze because that's when volatility is at its lowest, and right when volatility is at its lowest point is usually followed by a very large pop in volatility, either to the up or downside. So people like to know when volatility is at its lowest. So I'll use this, and you can see that in this. How you use that would be the green base is lowest volatility, and anything over that is volatility either to the upside or downside. So the best is to try to catch stocks when they're really low volatility, because then you know that the volatility will bring in more stock price movement. So you still have an aggressive move in there. Because when you're catching stocks at the highest point, like right here, if you're catching stocks at the highest point in the volatility, in the short term, it's going to probably flatten out, like right here. In the long term, SPY obviously just had a bull run right here, so this isn't a good example, but you don't really want to buy stocks when it's at its peak of its bullish volatility curve. And then RSI down here. RSI is very, very popular. RSI just shows you oversold and overbought levels. So over here, you can see SPY started getting overbought, kind of flattened out here where it just went really flat, started getting overbought again, and then it really flattened out right here. And then right about here, it started getting oversold and getting bought back up. So most of the time that stocks are just in a pattern of being oversold, overbought, and they'll just keep going back and forth. So most of the time though, I wouldn't use RSI on an hourly, 5 minute or anything. I'd use RSI only on a daily or even more, like a weekly, because you're gonna get a much better picture. As you can see, SPY is being bought up at all these levels. You can see here, we'll talk about chart patterns really quick. I have these two highlighted. On the weekly, this was a double bottom. right here, right here. Perfect double bottom where this bounce also perfectly bounced here 2 times. That's where you catch it and you just take it up. You how you play a double bottom like that is, I'll show you on the weekly. You see this trend from here to here. Here, I'll make some trend lines. From here to here. And here to here. You can see it makes like a W. Go here. How you would play this is you would take it over this middle. This little middle, this middle spot right here, guys, you would have that as your resistance. Because right here it went over here, rejected here, here. Use this as your floor. Oh shit. And take the stock once it passes this level, and you would have been a really nice bull run right there, guys. That's just a double bottom. We'll go more into we're just doing indicators on this one. We'll go more into stock patterns, chart patterns in another one where I'll go more in depth on all types of patterns. So, and then we got just a few other indicators. We got is it or we'll go back to Webull actually for this. Tell me if you guys are still seeing the screen. I'm gonna just do it on the same oh. I'm gonna just do it on the same thing. Go to trade. There we go. Okay, we're gonna move the moving averages, and we'll do. Oh yeah, that's my favorite one. Okay, we'll do. Is it on Webull or do we have to? Oh yeah, fib levels, Fibonacci levels, guys. Some people live or die by these. They look different on Webull. I'm gonna move actually. Yeah, back to. We'll go here. Take this. Auto. I like them on here. The auto fib levels. Yeah. On here it looks. Yeah, you guys have probably seen these a million times. The Fibonacci levels that people use. People live and die by these. So how you use these? People use them as support and resistances, with some levels being more important than others. So the 6, as I know here, get rid of this. Oh, not didn't mean to delete that. Okay, the point right here, the 0.618 level on an auto fib, guys, is probably your most important level. Go to an ARI, and auto fib is fractal, meaning it's this, you can use it on any time frame. This one doesn't matter. 0.618 is your best level right here, guys. When something crosses under the 0.618, it's pretty bearish. You would have taken this on a put. Boom, and now it's coming back and testing it. Anything when anything crosses 0.618, it's nice for scalps. This is a very bullish and bearish level where everyone's trying to play the 0.618. And how people usually associate that with, if a stock comes to this one or test or SPY got up to the 0.786, it will retrace, right? Some people like to take it on the bounce of 0.618. SPY came all the way down to the zero line. Zero line is pretty popular for bounces too, because that's the last line it has before it really loses the trend this trend that it's on. It retraces here, and people take it on this bounce. This one was nice. And on TradingView, guys, it will just, this is auto fib, where any stock I go to will just auto put the fib levels in like that. And fib levels, each one's different, you know. So like if you see right here, all these levels right here, but once you get over this one, you got a huge level on here. I mean, not huge, but huge compared to these 54.11 to 54.41. That's a 30-cent move. You wouldn't want to play that. You wouldn't want to play a snap until it gets over this 0.786 level. Fibs are good for hourly, daily, weekly. I personally like auto fib levels on daily though. That's how I would use them. Yeah, on TradingView, it's called this is called it's called auto fib extension. You're gonna use this one right here. I don't do anything to it. I just leave it exactly how it is, like this. I don't extend them left. I mean, I guess you could extend them left, but that might, to me, that kind of ruins the chart if you're gonna use it like this. Because they update, the fib levels update, so like when the market opens, these fib levels will be different, you know. They're always changing. So those are pretty much all the indicators that I want to go over today, guys. If there's any indicators that you guys have questions about or you guys use that you guys want me to talk about, drop them in the chat right now. I'll go over any indicator. I don't really use too many indicators. Me personally, like I said, I really just stick with VWAP. Ichimoku is probably my two favorites. I use a TCM squeeze on my chart. I'll put the RSI on every once in a while. I'm not really one of those guys who puts 10, 8 indicators on. I use different indicators for different situations. So where I'll use the TTM if the market's looking really flat, I'll just use mostly TTM squeeze and play quicker scalps. Or if the market's looking very bullish and noticing a lot of fun like news coming out and the fundamentals are looking good on a company, I'll take it long and I'll use the Ichimoku to find the trend. My favorite for also for Ichimoku, guys, it's also fractal, just like the fibs, where Ichimoku, the levels will they'll be the same on any time frame. That's what I like about Ichimoku is your Kijin is going to be the same on a 1 minute chart that it is on an hour chart. It might look different, but it's I but to answer your question, Don, I would say me personally, I go hourly for Ichimoku is the most accurate for bounce levels. The hourly on the Ichimoku and daily is really good too. Hourly is really good for bounces though. Got any more questions about indicators, guys? No worries, Don. Thank you for coming out, Don. And yeah, I use auto retracement too. I like I'll throw the auto retracement. I don't always have it on my chart. Like I'll have it on TradingView. I'll toggle it on and off to try to make my charts kind of look more cleaner. Because really, guys, the most important thing about a chart is your stock price. You know, the green and red candles. You don't want to clog up your charts and try to take away from what's most important is the chart patterns. The indicators are just going to help you with a system, build a system, because many people see a stock do something or move a certain way and they don't know how to act. So the indicators are there just in place kind of for people who like are good at following systems and can follow a certain, if this does that, I'll do this, but most people really are bad at following that. People, that kind of gets into my next point. Before I get off, I'll just go over kind of trade psychology. We'll talk about fear. Guys, everybody knows fear is your number one enemy in this. If you're scared, you already lost the trade. So what I would say is you guys gotta desensitize yourself. Don't you know? Don't become like a cold-blooded killer, but you can't be afraid to lose money at all. If you're afraid, then you already lost it. What I would say though, many people also in trades, another tidbit from someone who's been trading a while, don't enter more than two trades and at a time if you can't handle that. I know even I can't handle that. I've been trading 3 years. I do not enter two trades at the same time unless there's similar markets where they're moving similarly. If we're talking swings, we can talk swings. There's some exceptions if you have some that are farther out, but you don't want to enter a bunch of trades at the time. When you focus all your energy, guys, on one trade, I'm telling you guys, you're 100% more likely to become like consistently profitable because you're gonna focus all like you're gonna really want to make green on that trade. So if you're up 10, 20%, you're like, okay, this is my only trade. I'm gonna take my profits. But when you're in two, three trades, you might be up on one trade, oh, and be like, and down on two other where you get confident, oh, my one trade, the other trades will come back. And your one trade goes south and now you're down three trades. You know what I'm saying? So really watch out with over trading and being in different types of trades. I would also say my tip is like when you get in a chaos, I like to scalp a lot. So when you get in like a chaotic situation when you're scalping or quickly when you don't know what to do in a quick situation, you always want to take action quickly. Do not wait. Some people will sit on their hands. That is not how you're not going to make money by sitting when you're stressing out like, "Oh, do I sell? Do I?" When you're thinking that, just sell the stock already. Just get out of the position, reposition, go to the drawing board, redraw your next play because you don't want to be in that position. Before I get in a trade, like I say, you want to know if the stock doesn't do what you want it, you have to be ready to cut it as soon as possible. And I'm not saying cut a trade if it doesn't go up 10% in 5 minutes. I'm saying before you get in the trade, let's say the stock is at 340. If the stock comes down to 338, just know that that's the price that you're going to cut it at. And if it does come down to that, you cut it no matter what. Because people will not hold on to that, will not hold on to a system like that. That's what mostly keeps everybody inconsistent in the stock market. Because consistency is what makes you money. Anybody can make a lot of money. We could all, anybody in this group chat can make $1,000 a day, you know. But can we do that every day, for a year? Because if we could, we'd all be, you know, 500. That's about 500,000, I think, a year. We'd be really good. We'd be chilling. That's what I want everybody to do. Consistent trading. You don't have to make money every day, but if you're consistently making $400 a day and you're hitting three, four times out of the week out of five, then you're going to be making money. But what people do is they really just get too into the profit showing off. You don't want to get into that, guys. People's situations are different than yours. People have more money than you. People might just be flexing. You never know. But if you all that matters is have a goal at each day that you know that you want to hit, like a percentage. I'd say percentage. Mine is 15. If you want to hit 15% every day, hit 15% and then you're done for the day. That's also what I like to say. When you hit your target goal for a day, guys, you don't want to start trade over that. So that's where a lot of people lose too. They make one good trade, their trading day's done, and they're up 500, and then they want to keep trading, and then they lose the 500. So you don't want to do that to yourself. Just when that happens, when you're up early, just take the rest of the day for yourself. Have fun. You don't have to look at a chart, and be desperate to make some money because you already did. I personally, another tidbit, personally, I think I've already said this. I do not trade from 12 o'clock to 2:30. Those hours are off limits for me. Not trading during those hours because there's weaker volume in the market. And when there's weaker volume in the market, there's weaker moves. And when there's weaker moves, more prone to false breakouts and false bounces where you think something's going to bounce, it doesn't, or you think something's going to break out and it doesn't. You want to be in a trade with volume. So that's most of the theta decays with no movement too. No problem, guys. No problem. Anytime. And any questions? That's pretty much all for today. But any questions before I get off, guys? Thank you guys, everyone, for coming too. If you guys got any questions, just drop them in the free seminar chat. Appreciate you guys, man. No questions. If you guys got football bets, I hope they're all hitting today. I got the Raiders, man. That rivalry.
You got Detroit Lions, bro.
Man, you had to remind me about them. But thank you, Jay, for recording this, man.
It's all good. I'm gonna post the replay of the next 30 seconds for everybody. All right. Thank you, everybody, for showing up. Thank you, Dev Presidents, for taking the time out to hook us all up with some free game. Let's keep it going. See you guys tomorrow in the morning. Yes, sir.
Peace.